At IBCanada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
If some of the things you believe to be true about money are wrong, when would you like to find out? You see, now is the time to pay attention. Canadians have been shocked to their core by the economic effects of COVID mandates and recent Emergencies Acts. Over the past 2 years, Canadians have discovered how little control they have over their finances and are looking for alternative solutions for their money outside of the conventional wisdom that has been taught by the banks and the financial industry. Better solutions exist. Let me start the discussion on 4 things many believe to be true. So are these true? Inflation is good. Paying cash is cheaper than financing. I can only borrow from the bank. And 4, to get stock market returns, I have to take stock market risk. Well, let's start with inflation. Inflation is good? Well, that's wrong. Sorry to pass that on to you. Inflation is not a sign of economic growth as we've been led to believe. Inflation actually is the printing of money when the government runs a deficit, causing an increase in prices for the things we buy. Since 1970, the federal government has run deficits during every fiscal year for all but 4 years. You see, this is how Rome fell. It was inflation. As the story goes, Caesar, to pay for government and wars, started clipping small pieces off the edge of gold coins. People started to notice this, that their coins weighed less, and so they started charging more for what they were selling. This was the start of inflation. If that wasn't enough, Caesar then started melting down gold coins and then took some of the gold and replaced that gold that he took with other metals. People also noticed this and further increased the price of what they were selling. Things got so out of hand that the Rome economy collapsed. Our situation in America is potentially on the same path. Number 2, paying cash is cheaper than financing. Well, this is fake news, I'm sorry to share with you. Paying cash actually is financing. You see, paying cash is the opportunity lost cost. So what this means is if you had money that you have accumulated and saved for the purchase of something, once you redeem that, you've lost the opportunity that money would have grown to had you left it there. That's opportunity lost. So most people who buy a home unknowingly are doing this. You see, the average home worth $500,000 today, if you calculate a 25-year amortization on a mortgage, you would find out that 10% down payment would have grown to about $427,000 if you had just left it there. My question is, what could you have done with that extra $427,000 of extra net worth? 3, I can only borrow from the bank. Well, no, that's not true. We've been conditioned to think that we can only borrow from the bank. That's how our parents did it, our grandparents, and we just assume that's how you do it. You see, you actually have the ability to borrow from yourself. And the great thing of doing that is there's no credit checks. Now, when I say borrow from yourself, there is some setup required to do it properly, but you can borrow from yourself. And why would you want to do that? Well, over a lifetime, the average individual buying the average price car will spend about $100,000 and more financing their vehicles. Plus, they will also spend about $269,000 or more financing their mortgages. So, if you could be the bank and pay this interest to you, would you? What would you use that extra almost $800,000 in net worth for? I can think of lots of things. Is it that vacation you wanted to do? Is it the ability to retire earlier? Is it to buy that second property? Many options. And 4, to get stock market returns, I have to take stock market risk. Well, this is wrong also. I just completed about 38 years of research to prove you can get stock market returns at ultra low risk and with guarantees. Looking at this graph from 1990 to the end of 2021, method A versus method B, which option do you think provided the greatest return over that period of time? Now, method A is the Toronto Stock Exchange. Method B, I won't share that at this time, but when you look at the two, which do you think provided the better returns? Well, the correct answer is method B. Now, for some that might surprise you, but that indeed is the correct answer. And by all means, if you want to see my research, feel free to contact me. So this is a little chart to summarize that. I'll encourage you to pause the video at this time if you wish to look at the chart closer, but I don't want to go into great detail right now. But if you can get better than stock market returns with less risk and fees, would you? We provide better wealth with returns better than the stock market, with guarantees and protection, with ultra low risk and fees that generate additional passive tax efficient income, and the opportunity to recapture lost money, control, and time. So what's the next step? We would encourage you to join the discussion. Now is the time to pay attention.
IBCanada Group, your independent authority for information on the infinite banking concept.